Welcome. This briefing provides a high-level overview of the tax compliance lifecycle for Australian businesses. If you're new to this landscape, the system can appear complex. Over the next few minutes, we will guide you through the entire process, step by step, to establish the core principles required for legal and financial diligence.
Our briefing is structured across 5 key stages, mirroring the logical workflow of tax compliance. We will begin with the foundational rules and conduct codes, move through record-keeping and activity statements, and then cover data processing and the final verification and lodgement procedures.
Let's begin with our first section, compliance and conduct codes. To operate correctly, one must first understand the governing framework. Here, we will establish the legal and ethical landscape for all business tax in Australia. So, what do we mean by compliance requirements? Put simply, these are the rules and laws that a business is obligated to follow. They are established by governing bodies, primarily the Australian Taxation Office, or ATO. Adherence is not optional. It is fundamental to ensuring legal operation and avoiding significant penalties. This slide lists the key pieces of legislation that form the basis of tax compliance in Australia. The GST Act governs the goods and services tax. The Tax Agent Services Act, or TASA, regulates the professionals who provide tax services. And the remaining acts cover the administration of the tax system, privacy obligations, and specific taxes such as income tax and fringe benefits tax. Within the TASA framework, there are 2 key types of registered agents. A BAS agent specializes in preparing and lodging regular activity statements, focusing on obligations like GST and PAYG withholding. A tax agent has a broader authority. They can perform all the duties of a BAS agent and are also permitted to prepare income tax returns and provide comprehensive tax planning advice. It's critical to understand that these registered agents are bound by a strict code of professional conduct, which is enforced by the Tax Practitioners Board. As the TPB stipulates, this code mandates core principles of honesty, competence, client confidentiality, and the timely lodgement of all documents. The consequences for breaching this code are substantial. The source material shows that the maximum civil penalty for an individual found in breach of the TASA code is projected to be $222,750 in 2026. This underscores the seriousness of these professional obligations. Now that we've established the rules, we turn to the method of demonstrating compliance. This brings us to Section 2, maintaining accurate financial records. This is not just a best practice, it is the absolute foundation of the entire tax compliance system. The Australian Taxation Office is very clear on its record-keeping requirements. All businesses are required to keep records of their transactions for a minimum period of 5 years. So what constitutes an essential record? The list includes all invoices and receipts, complete bank statements, detailed payroll information, including wages and superannuation, as well as loan documents and any other binding financial contracts. Properly maintaining these documents is essential for substantiating all claims and preparing for any potential audit. With your records properly organized, the next step is to report that information to the tax office. Section 3 focuses on activity statements, which are the primary documents used to communicate your tax obligations to the ATO. On screen is a sample Business Activity Statement, or BAS. As the source material describes, this is the specific form used by any business registered for GST. It is the mechanism for reporting and paying tax obligations such as GST and pay-as-you-go or PAG withholding. The distinction between the 2 main types of activity statements hinges on GST registration. If a business is registered for GST, it lodges a Business Activity Statement, the BAS. If it is not registered for GST but still has other obligations such as PAYG installments, it lodges an Installment Activity Statement, or IAS. Let's examine the key components of an activity statement, using the figures from the source as an example. You would report the total GST collected on sales, and then subtract the GST paid on business purchases. You also report any tax withheld from employee wages, known as PAG withholding, and any prepaid installments on your own income tax. Finally, you can claim any applicable credits, such as for fuel tax. We will now proceed to the practical application of these principles. This section deals with processing data for GST, which involves applying the specific tax rules to your daily business transactions. This table illustrates how GST is applied. On a taxable sale, you add 10% GST.
On a taxable business purchase, you are entitled to claim a credit for the 10% GST included in the price. The net amount is what you pay to the ATO. However, it is crucial to note that some items are GST-free. The source provides the example of fresh fruit, which has a GST rate of 0.
To ensure accuracy, transaction coding must be a systematic process. First, you must understand the different GST classifications. Second, gather the relevant source documents. Third, identify the transaction type. Fourth, apply the correct GST code within your accounting system. Fifth, record the transaction. And finally, review and confirm the entry for accuracy.
We have now reached the final stage of the compliance cycle. This fifth section covers the verification and lodgement process. This involves the final checks and procedures required before submitting your statement to the ATO.
Before any statement is lodged, a rigorous verification process is essential. First, check the accuracy of the data by comparing it to the original source documents. Second, review all fields on the statement to ensure they are complete. Third, cross-verify the key figures against your internal management reports, like the profit and loss statement. Finally, the document must be signed off by an authorized person.
And of course, meeting ATO deadlines is mandatory. This table shows the typical quarterly lodgement schedule. For the period from July to September, the statement is due on the 28th of October. These deadlines are firm, and failing to meet them can attract penalties.
In summary, best practice for tax compliance can be distilled into 3 key actions. Utilize robust accounting software to ensure data compliance, stay informed about any legislative changes that may affect your obligations, and engage a registered BAS agent to review all documents before they are lodged.
This concludes our executive briefing on Australian tax compliance. The central takeaway is the need to embed these processes into your business's daily operations. By doing so, you move from simple compliance to actively mitigating financial and legal risk. The question to consider now is how your own business can best achieve this integration. Thank you.